Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Okay, I'm going to go with Zoom Video Communications, ticker ZM. And this is down 65% over the past year. But if we go back, I mean, this is a stock that peaked, I believe, in 2020, right? When we started reopening, like in late 2020, when it started to be less virtual and like some stores started to open and restaurants started to set up on sidewalks and that kind of stuff. I think that was when Zoom stock peaked. Jeff, it's down 88% since then. 88%.
The market clearly thinks that Zoom is all simply us using Zoom to communicate casually. And I don't think they really have priced in what at least Zoom's trying to do on the enterprise side of things.
I think that's right. I mean, the reality, Zoom was never made for Zoom cocktail hours, right? We adapted and we used the tools that were available, and it was the one that was available. And as the enterprise has shifted from a find a vendor, sign a contract, get it up and running tomorrow, kind of MO, to back to a normal cycle, growth has slowed and actually kind of gone backwards a little bit. But Zoom, I think, has adapted pretty well. And while it has adapted and its growth rate has kind of normalized and come down, I think the pendulum has swung so far the other direction that Zoom, this cash cow, very cash positive, very profitable, high margin company, has kind of gotten looped in with a lot of the other SaaS, enterprise software, high growth cash burn businesses. And it still continues to be discounted. So to kind of support my thesis on Zoom, I just compared it to a couple of real stalwarts out there. One that it really doesn't compete with in any way, and it kind of relies on, and another that really is its biggest competition. So the first one, I compared it to Apple, right? And the reason I wanted to use Apple is this stalwart, again, cash cow business that people love. And it's moved back into, if not a premium valuation, I think it trades for a relatively fair valuation for the quality of the business and its likely ability to grow cash flows, at least at a modest amount going forward. Apple trades for about 21 times free cash flow, a little less than 21 times free cash flow, and about 19 times operating cash per share. Okay. Now, its biggest competitor is Microsoft. Because you think about what Microsoft's trying to do with the enterprise, they want a full suite of communications, all of the tools, right?
Right. They have their Teams product, which is the direct competitor to Zoom.
Yeah, and I don't think there's any arguing that it is certainly the biggest threat, competitive threat. But along with that, you get everything else that Microsoft does for the enterprise, everything that it does for consumers. You think about this gaming business that they're growing. Microsoft trades for 29 times free cash flow and about 21 times operating cash flow per share. Zoom trades for 18 times free cash flow and less than 17 times operating cash flow per share. So it's cheaper than both of those two much larger, much more stable businesses that I have a lot of trouble believing are going to be able to grow over the next 5 or 10 years at a faster rate than I think Zoom will. Maybe I'm wrong, but it just seems that it's discounted to this point that the market's just kind of throwing the baby out with the bathwater to a certain extent.
Yeah, I mean, I think Zoom has to prove that the other moves they're making in the enterprise space, like Zoom Phone and Zoom Rooms and the call center that they're developing, and they're even kind of stepping into, they have a very basic chat function built in that, I heard one, I read one article where they're trying to turn that into something a little bit akin to Slack. And that's all, and it's going to be mostly enterprise. So it's going to be out of the sort of realm of what the individual investor might know that they're doing. And that's always what becomes difficult with like business to business sort of companies. So they have to prove that they can do all those things, but it's been beaten down so much that, and there's already been some traction on things like Zoom Phone, that it's hard not to think the market's got it wrong, or at least is pessimistic about it overall.